Hello everybody, Anton Höpfel for Manapa. This is our debriefing of today's Bund session. It's Tuesday, October the 29th. And let's see first what did market in at the overnight session yesterday and in the early pre-market. You can see here yesterday's profile. That means we were able, or market were able, to get below this area of before support. So the area around 75 up to 81. And we went through, we built even a weak low, that means an unfinished distribution, but overall staying here within this actual area, knowing that this, as long when they retest this area, stay below this area, 75 to 81 around, then we are in the situation that then the before support became resistance. Of course, on the other side, if they cannot handle to get here the support area, this orange line here, to become then resistance, so that means with initiative through it, pulling back and staying here, means that we have the opportunity to prices going back to the yesterday bigger area of value, excuse me. So the area from starting here 84, 85 and up to the 95 till the volume edge here at the 171 zero level. So this is important to understand that this was a support area from the longer range duration from the last 1-2 weeks, and now we went through. We had a strong finish distribution here. Marked, you also see it here in this area and here, but before the days we had at this area in the distribution profile here starting low volume node. So again, we crossed it. That means initiative. Now we have a wonderful, quick, short trend yesterday, intraday, boom, and now having this balanced area. The thing was decided then as overnight was, let's say, nothing to add here because it just stayed in this range. But the pre-market then was interesting to watch as the prices went up and up and up. Small steps, but delta was, like you see already here, starting here at 8 o'clock, was a little bit stronger than on the bullish side. So they tried at least and took a look here if we got into the short again, which I would take then obviously if we get even below this area of 68, or if we stay here at the 75 volume edge in between and the low volume node up to the 81 rotational level. So here in between, if they stay here and build initiative, then we have the opportunity, if we then got first to our target 1, this minor POC at the 84, 85, then target 2 to the 95, and target 3 then to the volume edge here to the 0 level. So that means this is my hypers. You can also see it here then, hyper 1, range long level to 73. Play short, strong selling initiative towards the 68, then target 63, 60, 53. And the long play means support didn't become resistance because they cross it with initiative. I would go here with the momentum play. This is then not the range play, but the momentum. If we see that they accept this 85 area again, and we get it with initiative to the 95, target 1, and then 171. Now see what happened. First, we take a look here from the pre-market where I prepared my levels. You see that after I prepared my levels, they took out already with a lot of buying initiative in the pre-market this area. That means they drive towards with initiative to this 85 level. Taking a look, pulling back, and you see, all right, first good signs here. You see here marked this rectangle here, this greenish rectangle. This was this low volume node. Also here then this rotational level around. So that means we had the situation that we pulled back, but we were not very strong from the bear side. You see this also here, delta or here. Very, very good sign, number 1. That means, all right, we at least crossed it now in the pre-market. That means that support area didn't become resistance. They can drive through with initiative, of course, taking it out and defending this area. You see this very, very, very good in Bund as they really play the levels like by tick or 1 or 2. All right, new initiative was coming here, and you can see this here, new initiatives coming in again, and now again driving through and even above this 85 area here. staying strong. And then the open took place. At this moment, profile was shaped with a bimodal distribution. That means it was divided here, and it shows the upper distribution exactly, of course, this area where the bulls are wanted to play and say no resistance, we going back. And this means, to understand now, this is the area where, as long as we accept this, you can look for two kind of entries. Like my colleague here in the stream did it. He provided here his area as pullback and said here, all right, this is then the responsive buying entry. And we saw that as they played here, going back to this area, and you see people starting to buy again. No big initiative on the sell side, though we had some selling after they opened to immediately play the drive here, but that was maybe only retail money or smaller money, and they was caught and they get out of the position. So this reddish candles here in Delta was only the result of people getting out of position or stopped out. Anyway, we see this. All right, this was then this was not my, but from one of our stream, from our mentoring group. He said, right, this was here the good chance from this rotation here, right, to get here into the long. As my level was not reached, you see this, I was not expecting that they really take it on so fast within the pre-market phase. So, but for me, important then, don't take then a play if it's not prepared, because you want to stick with your system. So I didn't take on then a trade here, stayed flat. I knew I had a second opportunity, as I not take this entry because it was not prepared, to look then for initiative away for the momentum play, because we still had some good risk reward. As the POC of the day was developing around this area, this 85, so rotation level, and POC got accepted again. So that means I was looking for prices moving back, getting here to the POC, and initiative away. Unfortunately, this was not happen. And I want to show you this because it's important to understand how to read order flow to also avoid unnecessary trades, which normally then you got stopped out with 1, 2, 3 ticks, and you maybe collect 1 or 2 or 3 of them over the morning, and then you got 3 times, let's say 3 or 4 ticks minus trades. Do you understand? That means your order flow is not only giving you the possibility to manage your trades good, but also, let's say, protects you for getting too fast into a trade when there is no trigger. Therefore, it means you can read trigger and can read if there is the possibility to enter or just stay flat. And I want to show you why I didn't then take a trade. Number one was, I saw, like I said before, after the open, they immediately tried to play the drive play. That means if you're looking here for an immediate entry, I would say this is not good, because the first 1-2 minutes, at least 2 to 3 minutes, I'm always waiting and want to see what the market is doing. I'm not going immediately because, of course, money is coming into the books when at 9 o'clock cash open is happening. And then it's not just like I'm not rating these triggers like the normal triggers I get then during the day. It's right, okay? You understand, some people getting in position, some money is coming in, just some from the closing and everything. So they just prepare like everybody else their day and trying to find first areas of agreement, but not something where I have to be involved, right? So I waited here and I waited for this scenario. I saw that they get some fresh money into the books here, initiative away, also from the POC. So normally, you're totally right, this could have been a trigger when you may be looking around to enter here to 88 and then looking 1 minute, 2 minutes. And then what you see is they already starting here even before the price hits the lower areas of the open range. You see already here when they get higher, investing money, they already get out of positions here at 9 o'clock and 3 minutes. So here would be the moment where you would expect then this should not happen, because if they take in money and risk in the book and they cannot get above this high areas for 1.5 and 2 minutes and then starting to get out of positions, this is not a good sign. Anyway, I was not looking for a trade here, but what I wanted to see was if they after see this red candle, what I wanted to see is that they absorb it. You understand? I mean, this should not have happened then. You see this candle going down here, the price going down. I want to see it. It's okay for me that they're getting out of the position, but what I wanted to see would be they staying here at this price level. You mean absorbing, 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 and then boom, initiatives coming in again, like this green candle. This is where I would have waited for. This is what I would enter, because I knew still a good risk reward in intraday scalping, because my target 1, right, would be the 95 area and then the 0, 171. This just didn't happen. So unnecessary trade avoided. Very good. Price came down. Lower, 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 lower. Here was the range long entry. If this would have been changed to my level where I had here, because I didn't expect this was happening, I didn't change it. I also was then for a few minutes then not in the market as this was happening. I just opened up here again a few minutes before 9 and saw just that this has happened. I didn't change my level, but I could have, but I didn't, because I did not, and I had not the time and didn't see it. No matter what, I don't play it. But my colleague here in the stream from mentoring group, he was right, and he said, right, this is a good level, and you see responsiveness already starting here when they hit this area. Buy tick, right? Buy tick. Here, 9 o'clock 9, 9 o'clock 9:30, 9 o'clock 10, 9 o'clock 11. You see they start already to accumulate. You can have a close stop, maybe 2 ticks below, getting here very cheap into this trade and seeing impulse phases coming, reaching your target 1. Range intraday. If you say, all right, this was a cheap entry, okay, protection area of the bulls, being above rotational level, number 2, number 3, let's keep this second position for my home run to my target 2 and 3 in the books. You could have, because see this price didn't get lower than the before area. So even if you stopped still tight here below, you would not get stopped out, had your first trade with, let's say, 6, 7 ticks, and now waiting just with a 1 tick stop here below the second position, what happening? And what was happening was, you were right. The books kept on remembering this was our protection zone. They absorbed even a little bit selling here, but price didn't even get into and testing with them, trying to liquidity fishing to the downside. So you stay in your trade. You see money was here, but no way to get here with the momentum triggers, because here is no trigger for me. Look at this moment when I was watching. I saw this, they hit the POC again from the 2-day and this area. We see initiative, boom, this candle here. It was just this candle, 9 o'clock 13. You see this here? Number 1 here and number 2. The problem was, as we reached with the second continuation candle, the candle after the first initiative, which I want to see as a follow-up candle, confirming that they are willingness to keep on buying even after the initiative away from the PC. And this was not happening. You see this second candle here at 9 o'clock 14? Look at the delta where I marked with the red arrow. Immediately rejection. That means we still are in an agreement of range balanced phase. Responsive selling here, responsive buying here. So you stay in your trade. No entry trigger for me here to get here into the trade, because it was not confirmed as responsiveness immediately starting as price hitting this area of the range high, right? All right, next opportunity. Look at the next green arrow. I was waiting here. All right, if they now absorb here, then initiative, room. I could get in here, but this was not happening. Again, still agreement range play, right? So the moment where you are thinking of, all right, do I stay in the second position because it was cheap entry and I want to go here for my target 1 and 2? You could have stayed in, and you see the range play continued. This time we were able to not immediately responsive sell here at the top. You see prices with delta and convergence. As we now coming back, you don't see immediately sell power here at this moment. I mean, compare this situation here with this here. You don't see immediately sell power. The problem was the PUC at the moment for me was not shifted. Not only for me, for everybody. You see this here, the red dots here? This is the PUC of the intraday. That means PUC, that means value was not shifted. Normally, what I want to see is either I have shifted value, or if not, and we are close, so that's everything okay, I want to see at this moment initiative away, driving away here from the PUC. Like here. But we didn't have this, because look at the delta. It shows just a little bit tiny buy here. This is not so good. You see this? It's not like the delta we had when we had this initiative, like compared here. See this candle here, and now watch this here. This is not so strong. In other words spoken, if you look at the footprint at all, and I only see, let's say, 200, 150, and 200 contracts on a normal day, this is enough. This is not enough buying power I want to see. I want to see more than 350, more than 400 on this day to say, wow, this is real initiative from the buy side. My eyes anyway are trained to not even have to look anymore, always in Bund at least, to the footprint, because I see this like when the delta candle is compared to the others just mediocre or not very, very big, then it's not even worth to look here. So I didn't have another trigger, no entry for me. Even now it worked out. It was a weak bullish trend starting here then in this zone of rotational level. Anyway, the best thing would be like our mentoring group member here who said this was the best situation. I totally agree. This was the cheapest entry, home run at possibility number 1 target, then staying in the contract was not endangered, all right? And then you see we reaching more initiatives now coming here as we get above. That means getting above the initial balance range, pulling back, stayed in control, new initiative yet absorbed, but also no selling, and new initiative driving directly in our target number 1 from my hypo 3. Target 1 was reached, and then target 2 also here with the 171 zero level. See this here? So that means it was not a super bullish trend, but it was able to be played with good risk in terms of a good chance. So this was the day. No entry signals for me, as I only could play the momentum play as my target wasn't reached. But if you were in the context playing this level, which my colleague here prepared at the 81 level, this was able, if prepared, to be played very good. So that means my hypo 3, and remember, it was the play long strong buying power into 85, which we totally got, right? We had it just with the pre-market, see this initiative driving through into the 85, staying in here, and I mean, you see it directly here in Delta, where the biggest candle in the pre-market were. It was this moment and it was this moment, and then nothing till the open, but this was again driving into, and then just reaching targets, the 95 and the 0 level here, target 1, target 2, without getting in danger, but only with a responsive entry here, in context, and let's go back here to see it once again, in context of that the pre-market built this right, nice B-model distribution with the shift of value here onto the top area exactly at the 85. So this was the recap. Hypo 3 was played. I couldn't play it because my targets at my areas of range was not touched anymore in the cash market, and then there was no good momentum trigger for me to be seen. Thanks for watching and listening. Antonov for Manapa. Bye.